Assalamualaikum and a very good day. Today we will be discussing the impact of Malaysia Budget 2025 on individual taxpayer.
Good morning. I pay my taxes, but everything is getting more expensive. Groceries, childcare, petrol. Where's the relief?
Do you know, under Budget 2035, you can now claim 4,000 for education and medical insurance and up to 10,000 for medical expenses. Have you submitted your receipt for those?
No, I didn't know.
Okay, now it's time to maximize your tax relief. Don't let them to go to waste.
Chef, I sell things on Shopee. Do I need to pay tax? Because I don't work any company.
Yes, if you earn 34,000 a year, you have to file income tax even if you are self-employed.
Oh no, I didn't know that. I never declared my online sales.
Don't worry, you can also claim your expenses like petrol, car service and phone bills. Budget 2025 makes it easier now with a simple form for your gig workers.
Really? That's help. I better start learning about this.
Yes, you better start now, then regret later. I will help you.
NAZIRAH, I live above my dividend. Now I tax more, even after retirement.
BINTI, only the amount of 100,000 you could spread investment or check if some APF or SNB leak. Those are exempt.
Oh, look like I need a more strategic session.
Yes, let's track your income and maybe talk to a tax advisor.
Presented by Prime Minister and Finance Minister Datuk Sri Anwar Ibrahim on 18 October 2024. This budget carries the theme Ekonomi Madani, Negara Makmur, Rakyat Sejahtera. It aims to strengthen the economy, promote inclusive growth and improve the well-being of all Malaysians. With a total allocation of 421 billion, this is Malaysia's largest budget in history. Presented by Prime, it includes key changes such as a new 2% tax on dividend income exceeding 100,000, expanded personal tax relief. It includes key changes and adjustment to the sales and service tax. Employment-related incentives like higher minimum wage and the progressive wage policy were also introduced. Our objective today is to analyse how these tax proposals affect different groups, especially the B40, M40 and T20. We will look at both the financial and social impacts, including how they influence disposable income, cost of living and overall taxpayer behaviour.
Budget 2025 is more than just a financial plan. It's a strategy tool to support economic growth, manage public finance and reduce inequality. A major focus is on individual taxpayer category as B40, M40 and T20. One of the T-tax proposals is a new 2% tax on dividend income above RM100,000, which mainly target high-income earners in the T20 groups. To support lower and middle-income groups, the government is expanding tax relief for childcare, medical expenses and green technology. Adjustment to the sales and service tax or SST will also affect the cost of living. Additionally, job-related incentives are introduced to help young and women re-enter the workforce. Overall, this challenge impact disposable income, what left after tax and essential, and influence how people spend, invest, or save. Understanding this measure is essential to grasp how they affect different income groups in Malaysia.
In this video, I will be sharing an overview of the current rules and practice for individual income tax in Malaysia, focusing on how things were before the change introduced in Budget 2025. Malaysia uses a progressive income tax system, which means the more you earn, the higher the tax rate you will pay. As of the years of assessment 2034, the tax rates range from 0% to 30% based on your chargeable income. The first 5,000 is not taxed at all. Income between 5,001 until 20,000 is taxed at a low rate between 1% and 3%. For income between 20,000 to 100,000, the rate goes from 3% to 90%. And if your chargeable income exceeds 100,000, you will be taxed between 90% and 30%. To make tax payment easier, salaries worker contribute monthly through the PCB system or potongan cukai bulanan, while our taxpayer must file their annual income tax using the e-filing platform managed by LHDN. This progressive system ensures that the higher earners contribute more, and it's helped the government collect revenue to fund public service like healthcare, education, infrastructures, and welfare programs. Understanding this current tax practice is important, especially before we look at the new update in Budget 2025. It's helped us appreciate what has changed, and more importantly, why those changes matter to us as a taxpayer.
Hello everyone, in this video, I briefly explain some issues and challenges with the Budget 2025 tax proposal. First, let's talk about the middle income group or M40. They earn between RM5,000 to 10,000 a month. They often feel left out, which is not poor enough for it, but not rich enough to be comfortable. Even with some tax relief in Budget 2025, many feel it's not enough because living costs like food, housing, and education keep rising. This makes them feel tired and frustrated as they pay a lot of tax but don't see enough benefit. Next is the complexity in the tax filings. Yes, to like e-filing help, but new rules and relief often confuse people. For example, the green lifestyle really sound good, but many don't know what item qualify, which is it's only for electric car or also solar panel. It's even harder for freelancers and gig workers who earn from different sources and don't know what expense they can deduct. Even normal workers feel stressed and with all the yearly change. So, while Budget 2025 brings a good idea, there are still problems. The government should give clearer guidelines and make things easier to understand for all taxpayers.
First, the new 10% dividend tax on income above 100,000 has raised concern, especially among the middle class and retirees, because a time of inflation and slow wage growth, some even call it as hidden wealth tax. Second, implementing this tax is complicated. People have to report dividends from multiple sources and assumptions like EPF or SNB to create confusion. This may increase compliance costs and lead to tax avoidance. Third, although lower income earners, those making under 34,000 are exempt. Many in the B40 and informal sector still feel left behind due to the lack of awareness or access to support. Those individuals often don't declare income, either because they don't know how or because the rules are unclear. They also miss out on structured tax relief available to traditional employees. Next, I will talk briefly about tax challenges faced by gig workers and digital nomads in Malaysia. More people now work as freelancers, e-hailing drivers, delivery riders, or remote workers. They don't have fixed employer and get paid enough apps or e-wallets. Malaysia tax system only tax income earned in the country, but it's hard for these workers to tell if their income is from Malaysia or overseas. Because of these confusions and no clear rules, many don't report their income. Some don't even know they have to. Also, these workers often miss out on tax relief like EPF, ISARAN, or Social Security benefit, unlike regular employees. So, in short, a lot of their income goes undeclared, which causes tax losses and feels unfair to others who do not pay.
Recommendation or best practices. First, track dividend income. Monitor annual dividend income, especially if it exceeds 100,000, as it will be taxed 2% starting 2025. Adjust investment to reduce tax burden. Second, maximize tax release. Use all eligible tax relief, for example, education, insurance, SSBN savings, elderly care, and keep proper receipts to reduce taxable income. Third, stay updated on tax changes. Stay informed about new tax rules by visiting LHDN's website or attending tax seminars to avoid mistakes and benefit from updates. Last but not least, use financial tools. Use apps or tools to track income, expenses, and deductions to stay organized and avoid last-minute tax issue.
In summary, Budget 2025 marks a major shift in Malaysia's individual tax system, focusing on fairness and fiscal responsibility. Key purposes like the 2% tax on high dividend income and expanded tax relief aims to reduce inequality. While this change lays more burden on high-income earners, they also offer some support for middle and lower-income groups. However, challenges such as complex tax compliance and limited understanding among taxpayers remain. The rise of untaxed digital income also highlight the need for better enforcement and education. Ultimately, the success of these reforms depends on effective implementation and public awareness.